following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 28th day of July, just about to wrap up July. It's amazing how time flies. And we're looking at an unchanged Dow at 21,797. The S&P is down 7, almost 8 at 2467. The comp index is trading at 6,361 and it's down 20. The VIX index is at 10.95. It's up 84 cents, and we're going to discuss that in a moment. I'll discuss it right now. Yesterday's spike in the VIX index, let me go there, VIX.X. Since it's Technical Friday, I want to go through this. That spike yesterday when we were hit an all-time low, 8.84 on the 26th of July, and then all of a sudden, you're looking at a huge candle. As far as candles go, this is one of the biggest candles we've had in quite a while, other than that very big spike back in June. That was the 29th, where you start off at 973. You end up in the 15.16 high, close at 1144. This is not even close. But it's a very big candle. And you would have anticipated, if I just saw that candle, I would have said, oh my goodness, this is one of those 280, 350 point down days in the Dow. The S&P must be down 28 to 35 points. No, it wasn't anything like that. That tells me that there's a tremendous nervousness out there. It is also now a cushion. It says that because there was this flailing up at the highs and a follow through today. Look at this. The VIX is up $1.08 at 11.19 right now. And what do we have? We have the Dow down, down 21 points. Big deal. But the S&P, now this is the dichotomy we've seen. Now we've seen so many dichotomies. We've seen so many divergences over the last couple of weeks, in fact, but especially over the last week, where we've had the IYT. Now, I'm coming back to the VIX index because this is part of the explanation. The IYT plunges yesterday, and today's down up 2 cents. Big deal, 165. It was up at the 175 level. That's a big move for the IYT. It's the kind of thing it had back in mid-March. Very sharp pullback. And what's really important about this, let me just get the 120-minute chart away for a moment. This is a leg D, and this is what I'm somewhat cautious here because all of the monthly charts have at least gotten to D, if not E. So now let's put the package together. So you've got a divergence between the Dow making all-time highs, mainly because of Boeing, which added huge points because of its massive 20-point up move the other day. But there were a couple of others as well that were acting very well. So the Dow goes to all-time highs. The VIX goes to all-time lows. Nothing there and nothing wrong there. That's what you'd expect. However, the QQQ series, the NDX 100, which led the way up almost all year, so that the Dow eventually went to a new high. No, how did it work? It went to the S&P, went to a new all-time high, followed then by the Dow and the New York Stock Exchange in the exact time. I don't know if that was March the 3rd. March the 1st, but they screamed to new highs. And then, and that's the IWM then followed, that's the Russell 2000. And then what happens is the Qs on the 9th of June hit 143.90, peak G in the Chapman Wave 5 in my 5 series, fall quite dramatically to 135.80, 8 points, not a big deal, only 6% or so, and then rally to a new high. And this is the thing, and this is the question that I've had. This is the question that I'm going to try to answer. This is the question I'm going to deal with on Wednesday night when I do my first of my webinar series, talking about sector rotation and can the sector rotation buoy the market so that all the way through to 2018, it doesn't break down. Instead, we go to higher highs. I'm going to be talking about that and how the sector rotation works. So now let's go backtrack, and we'll go to the VIX index to say, wait a minute, the VIX yesterday spirals up to the 11.08 area. What was that? 11 point something, 11.50. Sorry, 11.50. Come on, give me a break. 884 to 1150. That's almost 3 points. That's almost 37%. And the market barely falls. Today, the Dow's down 5, the S&P's down 7, and you've got the VIX index up 94. You see, the nervousness tells me that these are short duration moves, and that perhaps there will still be, now I can put the package together, the QQQ somehow or other could still have like a rogue wave, a sudden spiral to the upside to 146. It wasn't 146, it was 145.96. Goes to 145.97, somewhere around there, but it must be over 145.96 to start a leg D. And then we must say, okay, now let me put the package together. Look, Amazon makes a peak D and it plummets today down 30 points. The daily. Leg D weekly. Leg G/C still very strong in the monthly. Let's go to Amazon we just did. Let's go to Netflix. I want to go to all these very well-known FANG type stocks. So Netflix goes to an all-time high. It is at a B. It could be an alternate account G. I'm calling it a B for now. Still holding quite well, up 133 today at 184. It has to break to 191.51 to start leg C to the upside. And the weekly, I'm calling this more an F than an A. And the monthly is still in leg C. So once again, we've got very strong monthly technicals. The shorter term is saying that there's enough energy to try and rally to a new high, but the weekly says, you know what, after that high, you might have to have a consolidation, even if it's just a consolidation. Look at Google. This is Alphabet, GOOG. I don't go to the alternate one. This is the one that made a double top, missed by fractions, making a new all-time high. So it's a V-shaped top with the right shoulder much weaker than the left shoulder. So if I have to go through all these, now let's go on. Let me show you something else. The S&P, SPX.X, the S&P is in leg D, probably making a peak D today in the daily, leg D doji type candle forming in the weekly, leg D in the monthly. So as I'm putting this together, look what we've got. IWM goes to a leg E and then a peak E in the daily. A leg F, I'm calling it an F for now. There's nothing else to call it because I need to wait to see if it breaks from the 141 level it's at right now, 141.85, and it breaks down under 139. Then I'm saying, you know what, probably an F rather than an alternate account F/B. And at this point, the monthly is in leg D. As I'm getting all these monthly Ds, I'm saying to myself, there's a chance that we might be looking at some kind of a consolidation starting to unfold this coming week. And then we'll come back and we'll go to Paul in San Jose and we'll be looking at FSLR. And I want you to quickly put gold as we're coming out. Break up 6 at 12.72. Nice candle leg. How many of these can we have? Many. I'll be right back and we'll go to Paul.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman, will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. Just real quickly, let me say that gold this is quite a nice candle that we're looking at in gold. And just real quick, there it is, leg D. But it's nicely above the 200-period moving average. The 9-period is crossed positively. The MACD is good. Stochastics at 86%. This is actually the action I want you to see in the weekly charts. So far, the bias now says that gold has acted very well over the last 2 sessions, and that was very important what it's done. Just quickly, I'll tell you that the dollar trying to rally is sort of fading here. I thought the candle yesterday was quite nice, but it mustn't be, the low mustn't be taken out. But we are in a left side, right side price time match. This is the area where the dollar could rally. So let's see what we've got there. Now I want to go to Paul in San Jose. Paul, how are you?
I'm doing great, Basil. Thank you so much for taking my call this morning.
My pleasure.
Hey, happy Friday to you, sir. I wanted to look at FSLR. I took a short in this morning at 49.25. It failed at that previous downdraft from last August. I was wondering if you could give me your technical picture on it, because I'm considering just turning this into a day trade here, because it's going pretty good in my direction.
Okay, a couple of things. First of all, you explained why you're looking at this as you thought of it as a particular short and then went ahead and did that. It's fascinating. As I had this all notated quite a while ago. I didn't have the notation, so I just quickly did it. I'm not sure what the gap up story is today. If it's earnings, that's one thing. If it's just some kind of a news event, I'm always very cautious when I see a gap up on a Friday that takes you to a leg E or an F. Well, lo and behold, what do we have? We have the 200-period move act as beautiful support for FSLR, First Solar, Inc., obviously a solar company, and it goes to peak A, B, C, and it goes to D. And I saw this recently, and I thought, hey, how come you haven't included the solar stocks in the list of stocks that you look at? And then, of course, I forgot all about it. And then, lo and behold, this morning, as you said it, I'm looking at it, and it gaps up and goes even higher. So it goes from the 35s to the 48s. Very good action. Actually, the high today was 49.49. And funnily enough, this is a gap up to an E. I'm not sure what I can call it in the 120-minute chart, because it really looks like a news-related event. But what's so fascinating is you might have heard me talk about the 200-period moving average, how at a certain point it becomes it could be a breaking point either up or down, and then you sort of forget about it because the price just keeps going away from that. And then all of a sudden, as it gets closer, that 200 period becomes a magnet. Well, lo and behold, in the weekly chart back in the 29th of April of last year, at 62.14, it breaks under the 200 period moving average. And that was the last time it looked at it. But it's made a beautiful bowl or cup formation. And what's so fascinating is as I was redoing it, I missed a little low bar in the weekly chart. And I go to C and I thought, hey, the C right at the 200 period moving average. That's very interesting because that could mean it's going to bump against it, pull back, and then go to the D. Then I checked it a little closer and I said, oops, I missed one. Turns out this is kind of what I expect. In a 200 period moving average, it went right to the 200 period moving average in the D leg. The MACD is strong, stochastic strong in the weekly chart. So I'm inclined to think the same as you are, that, yeah, on a very short term, this could pull back. But I'm impressed with both the monthly leg A, very powerful. I'm impressed with the weekly chart, MACD very strong, stochastic at 93%, on balance volume getting a little bit overbought. But at the same time, that 200 period moving average usually touches it and it doesn't break through in that same move that it took to get there. In other words, this is still leg D and it went right to the 200 period moving average and then it stopped dead right there. Says to me there could be a pullback. Now, because you've said that you're thinking that because it's gone in your favor, you're inclined to take profit, I'm going to suggest to you two things. One is, I'm not sure. Give me 1 second. Let me see what the news is. It'll take me 1 second to do the news. Click. I go to click again, and then it says 22 stocks moving in Friday's pre-market and biggest midday. Where does it go? There it is. First Solar rose 9.1% to $48.90 in pre-market trading as the company reported upbeat quarterly results. Okay. I'm pleased I saw that it looked like it was a news-related thing. It looked like it was some kind of an earnings thing. Now what I'm going to say to you is this gap to the upside says to me that on a very short-term basis, it might pull back, but you have to see it take out the low of today, which is 47.44, and so far it's 1 point higher, and the market's already been gyrating, and this thing hasn't really been shaken much. So I'm going to say to you, because it's an earnings, and because the earnings are good, it means that more people will be interested in buying it, which gives it support. So the best I'm expecting is that it will fill the gap somehow or other, but the 45.31 9-period exponential moving average in the daily probably won't be hit until maybe later next week. That's the downside. On the upside, if it is up 3.60, if it closes anywhere above 3.20, what'll be? If it closes anywhere above 48.20, especially if it closes towards the high of the day, and it closes above the high of today, which is so far 49.49 on Monday, this thing could have a high-level consolidation as it keeps touching and tagging this 200-period moving average, because today is the day that the 200-period moving average would have as a repellent line. So it should be like an electric wire, that it hit it and it should just push back downwards, and so far it's just hugging it. So I'm just going to say to you, I think your idea of taking profits, I would do one of two things. If you've got enough, I would take half my profits now, and if it starts to break by the end of the day, if it's closer to 48.20 or lower, I would hold that over the weekend. I don't know if you really want to do that, but I'd hold it over the weekend, thinking if the general market closes down sharply today, Monday could be another down day, and FSLR should also be down. But the fact that it was up on higher earnings says to me that's different to if it gapped up, but then the earnings were perceived as not what you expected. They didn't meet all the criteria, and now it's breaking the low of the day. It hasn't done that. So that's my scenario. That short term, I think it's going to pull back. And if it pulls back, especially if it closes under 48, I would maybe even now, if it as it's going down, I'd lower the buy stop. I would exit some of my position. I would keep the position over the weekend. if there was a close, let's say under 48. I'd say, you know what, you've got a little bit of a safety, a 60-cent safety factor if there's a little gap up on Monday. But I think it's going to fill the gap and then might go sideways and keep coming back towards that 200-period moving average. So as a pure short, I don't see it right now as a pure short, even though it gapped up on a Friday to leg A because the news is being perceived so far as good. But I'm saying as a short-term short, if you want to do that, just start lowering your stop right now and your buy stop. And then if you want, you can hold a little bit over the weekend. I hope that helps you.
Yes, Basil. Thank you so much. I really appreciate that. Have a great weekend.
And you
Look
too.
forward to
Thanks
your
for calling,
webinar.
Paul. Oh, thank you very much. Wednesday night. And we'll be back with Tim, Greg, and Carlos straight after this break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we've got just a real quick thing for Tim in Denver who couldn't hold on. He wanted about the IBB. Tim, the IBB is suggesting to me that it's really starting to struggle. It's trading at 320.50, up 70 cents. Oh, you're there?
Here.
Oh, you are there.
I usually hang up, but I'm not working today, so I just want to say thanks to all you guys you and Tommy, everybody at TFNN. You guys are the best. Anyway, sorry.
Well,
I just wanted to,
Yeah. So, Tim, IBB, it had a very nice rally in a U-shaped pattern, broke the left side high of 323.45 on the 22nd of June, and on the 25th of July, it went to a leg E/C, and then it had a very sharp pullback yesterday. My suspicion is that the buying is not quite done. So I'm thinking, now you're looking at this probably as a potential short, correct?
Well, I am short now. I got short when it was a little higher. I got a little bit.
Okay, so
and
that's
I stayed short. Yeah. So.
Okay,
yeah.
so that's the scenario that I'm looking at. What I would say to you is that I still, and I'll be covering this in my webinar on Wednesday night. This is one of those sectors that has had a successful counter trend rally from its major high. Number one. Number two is, I have to go through a number of the stocks. It's like Celgene. Some of them have done really well, and some of them have just been stuck. They really haven't done very much in the IBB. So my contention has been a bounce towards the 324, 25, 50 area will tell me whether or not I'm getting a verification from the stocks themselves, the key stocks, that this can retest and maybe go to a D. That would say to me there's a chance that in the rotational aspect, if the semiconductors and the other major winners of the last few months start to take a breather, money will want to go somewhere. So then I have to assess, is this really where they'll go? Because it's broken. Once it's gone to leg D in the monthly chart and leg E in the weekly, I'm ready to start saying, now let's see if there's going to be more downside, or will this be the sector just to avoid, because it just whips around in a fairly narrow trading range. So let's give it a moment. I think by Tuesday, Wednesday, it'll be on my list of whether I want to be shorting it if it bounces to the 325 level, or whether I want to say, let's hold off, there's still more strength. We want to even maybe think of going long for the next month, but I don't know. So I'm saying I don't know. My eye says that the technicals are weakening, that it's probably going to be pulling back, but I need it to break 315 to really produce a momentum to the downside, and I haven't got that yet. So I need a few days. I don't want to be chopped around in a very narrow range saying long, short, long, short. I'd rather just make one decision, so I need some time. But my parameters are very simple. If you see it go to 325.60 by Tuesday, you've got to be a little careful, because there could be enough strength just to have one quick pop to 331. If it fails by Tuesday to even rally over the 322 level, instead it breaks down and goes under 319, you're in the right position. Does that help you?
You did. Have a good weekend. Thanks a lot, Basil.
Thank you very much. Let's go to Greg in Austin, Texas. Greg, how are you?
I'm well, thank you. How are you?
I'm very well, thank you. So I wasn't sure. The CL, is that, are we looking at Colgate, or are we looking at crude oil?
No, crude oil, and I had a question on the ABB, but you just answered that, so we'll skip that.
Okay, so this is very interesting because it's fascinating. I immediately thought, okay, Texas, Austin, I must be looking at crude oil. And yes, it is crude oil. So this is what I'm looking at. Crude oil has actually acted very well. There was an arch formation. It took it out. It went above the peak B of the 20th of July at 47.74. It's walking this, what I call the Chapman wave inside wedge, this green target repellent line. It's right at it right at this moment. It's acting well. And my eye says that it could very well go to the next level, which is 50.71, the high of the 30th of May. I should have asked you, well, what's your position?
Well, I don't have one. It's a more technical question about the candle, both in the USO and on the contract.
Yes.
The date of 6/22. Is that candle, because it's higher than the 623 price-wise, is that a peak leg A?
Okay. Let me do this because it's Technical Friday. I'm going to take a moment. It won't take long because it's a whole visual thing. We're talking about the decline that occurred on the 21st in leg F to the downside with a high of 44.41 and a low of 42.26. What happened the very next day is there was a higher low because the low of 42.26 from the 21st the low on the 22nd was 42.47, 19 cents higher. So that says I've now got a trough F. But wait a minute, I don't get a leg A until right there on the 26th. Why? Because there was a lower high bar on the 22nd. The high was only 43.53. It wasn't in the 44s. So that doesn't start A. Not only that, you have to wait for a trough, and I've got the trough. So now I have to put the two things together. Next day was a lower high. So I still haven't got an A at 43.41. But the next day on the 26th, we go 43.86. And that starts leg A, and what we call in the Chapman way, we call it, this is a floating ladder. So from that A, everyone is what it's called a leg A, and it goes all the way to the 5th of July with a high of 47.45. It's still leg A until the next day, where it has a high of 46.74, and that becomes peak A. But this is something very, very important. I have another A. This is the one I should also call a gray A. This is the one on the 12th of July. That's under the previous A. I always want to count all the peaks. All the peaks, even though it's lower than the previous one. Why? Because I might have had a peak B below that A of the 5th, and I'm one letter ahead. I don't want to ever be one letter behind, because I could think I'm at a C when I'm really at a D. And right now we are at a C, leg C, and the MACD is good and stochastic. Does that answer your question that A only started when I've had a little V-shaped little trough at the highs, from the high? So that's the high of the 21st, up in the 44.41 area, a lower high on the 22nd, a lower high on the 23rd, finally a higher high, and on the 26th starts my leg A.
Oh, okay. So that lower high on the 23rd, that doesn't start the A candle back on the 22nd.
No, I have to. I must
still
make
have that
right.
Trough.
I'm still in a declining low, making lower highs. Just make it as simple as that.
Oh, that makes sense. You
know what? If I have time on Wednesday, there's so many people that they tend to overlook that. I might just talk a little bit about it on Wednesday. I'll have just a little brief thing to talk about the wave count, and I'll include that.
Thank you.
So
Thank you.
Thanks for calling.
Have a good weekend.
You too. After break, we've got Carlos. Hope Carlos is still waiting, and Carlos in Miami. We'll talk about AMD, because I do want to talk about what did I call it the other day? Skyscrapers, silicone, and sneakers. This will be part of the silicone. Advanced Micro Devices. Trading at 14.02, down 10 cents after.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're going to go straight to Carlos in Miami, Florida. Carlos, how are you?
How you doing, Basil?
Very well, thank you.
I want to know more or less where do you buy AMD on the retracement? More or less what kind of...
So this is something I wanted to talk about, and I'm pleased you brought it up because it's going to be, I'm not sure if AMD will be there, but definitely I'll be talking in my webinar, I'll be talking about the semiconductors and what I'm anticipating moving into late August, early September. So in this particular instance, I've discussed advanced micro devices trading at 13.98, down 14 cents, a number of times over the past 6 months, but especially I think it was, maybe it was 3 months ago, someone had brought up advanced micro devices, and I said, if I squeeze this chart, I haven't got it in this particular instance, it's not fully notated. In fact, I even remember renotating it, but that doesn't matter. What I wanted to show was that I had followed advanced micro devices since Sanders, I think his name was the CEO or the chairman or the president or something of advanced micro way back in the let me see if I can get this going back. Let's see, we've got it back to the 80s. I think it was back even in the 70s. Yep, back in the 70s. I've been following advanced micro for years. And you can see just at a glance, I'm showing a monthly chart going back to its IPO, which was back in something like November of 1972. And you can see in this particular chart formation that it has incredible moves to the upside. However, it also has we can only have those moves to the upside if it has those moves to the downside as well. And now it's in the middle of a major move that it had back in 2006 when it screamed up to 42.70. The previous high was in June of 2000, when it went to 48.50, plunged down to 2002 to $3.10. Then it screamed up to that 42 level in February of 2006, comes down and has a bumpy ride, and eventually makes a low somewhere around $1.65, something like that. And now where is it? It's almost a 10 bagger. It's up at 13.95. So it's getting to the area where very often, certainly on a percentage basis, that's where it's a little bit more vulnerable. And it's just made a kind of a double top. It went to 15.55 in February. February, and now it's a high right now of 15.65. So now what I wanted to ask you, Carlos, do you have any position in AMD at all? Oops, we didn't lose him. Oh, I'm sorry. Carlos, if you can still hear me, I do want to do this because I wanted to say on a short-term basis, I've been waiting for Advanced Micro Devices to give a clue because I believe that they have chips. They have whatever they've come up with is something that, from what I understood, just in a brief commentary that I heard recently, is that their products have been extremely favorably well met. Okay? But on a daily basis, it's made a peak E. Carlos, if you can go back, that'll be great. It made a peak E at this recent high of $15.65 on the 26th. It hasn't broken down yet. The MACD is okay. It's not great. The stochastic has dropped to 59% in the daily. But it's the leg D and the candle we're looking at that says to me the decline that we've seen over the last 2 days is a little bit worrisome, but it hasn't broken down yet. So if you're looking to enter, and I think that was your question, as I recall, your question was, where would I enter it? I think that was a question. Hi, you're back.
I'm back again.
Okay, so Carlos, I think your question was, where do I get in? Was that it?
Yes, that's correct.
Okay. So what I did, I just explained that it's had a huge moves to the upside and downside. But basically what we're looking at is the weekly chart, this candle. We won't know until Friday, today at 4 o'clock. But this particular candle says at any point over the next week, if Advanced Micro Devices manages to rally to $14.70, this move is not over to the upside. It should retest the highs. That's the clue that you've kind of missed a nice move to the upside. I'm thinking that if you have patience, if I'm correct, that the SMHs are in a digestive phase right now, and this digestive phase says that it could not lead by going to a new all-time high above 89.72. It's now a little bit vulnerable because it stopped at 88.35 yesterday. I'm thinking that the semiconductors at best is going to have a sideways consolidation, maybe forming an H pattern if it takes out the 85 support in the next 3-4 days. And then what we're looking at is you're going to have really good buys coming up. But my thinking is you're going to need patience and time, that at this particular stage, and I'm wrong, if the SMHs take out the high and go to $90 over the next week and a half, I'm wrong. This is recycled and it's fantastic. It's going to help the QQQ. My thinking right now is that this is a very important timeout. It needs it. And I would say have patience. My biggest concern is Advanced Micro Devices, when everything looks its absolute best, you can see by the chart, when it has a digestive phase, it's more than that. It has indigestion, and it can really take a big dive down. But it's in leg C, probably peak C this week, going into Monday, in the monthly, and that says looking out, Advanced Micro Devices, no, the SMHs should make higher highs, and I think Advanced Micro Devices should do that. So I'm saying, have patience, have a little. You could even start nibbling. It's at $13.95. If it gets to $12.20, I'd say, give me a call. Let's look at it again, because that's where I'd say maybe this is the time to start nibbling. Just nibbling, because at 11.28 is the 200-period moving average in the weekly chart. My eye says that if Advanced Micro Devices by Tuesday or Wednesday of next week is below $13.40, there's a really good chance that it's in a digestive phase. It's going to take time. It'll be percentage-wise because it's such a low-price stock. And if it was 139 going to and 111 is not such a big deal, 2 points. But at $13.94 going down to 11.28 on a percentage basis, that's quite a lot. So just have patience. I think you'll have a chance to get into it, but I really want to see it base. And I'm wrong if it starts to climb and, as I say, gets up into the mid 14s or the 1460s.
Okay, right.
So, but keep it in mind, if you start to see it break down, give me a call and we'll look at it together. But it is one of those stocks that's also very important. It's one of those that I look at to say it's really just a very cheeky stock. It's very aggressive in its own way, and yet it's always down at the 13, 14 level until it really powers higher, and then it screams to the upside. And it's so fascinating that it's gone from $1.65 do almost $16. That's almost a 10-bagger. And most people don't even talk about advanced micro devices. So it's kind of under the radar, and yet it's been there since the 1970s. What, 34? It's 40. It's 40. It's nearly 50 years old.
Yeah. All right, thanks, Basil.
I hope that helps you. Thank you so much for calling. Good. Call us in Miami. So, folks, when we get back, we'll have that final section. I'll talk about what we're going to be looking at, why it might be an appropriate time to sign up for my webinar coming up, my 2-webinar series starting Wednesday, August the 2nd, and then again August the 16th. And every day we're going to be going through the charts and whatever it is we follow based on the chapter we've done.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So let me just show you, this is the opening call to series webinar, August the 2nd and August 16th. Sign up now for a 30-day free trial to Basil's daily newsletter, the opening call, and gain entry to his 2-series webinar taking place in August. And then what is it? What is it going to entail in terms of what are we going to be doing? Let me see if I can find that right here. So you'll get my daily newsletter. In the webinar, we're going to talk about can sector rotation buoy the market into 2018. For 6 years, since the summer of 2010, we've seen that there's been a rotational correction so that the best take a breather, but then the worst start to rally. And they can rally actually very nicely, maybe for 6 weeks or even more. And then they come back down again and the leaders come back. Is that the case? Is that how we're going to get our leg D in the semiconductor, the SMHs, only in leg C at this particular point in the monthly chart? I'll be talking about that. I'll be talking about what areas could work very nicely over the coming few months. I'm going to be looking at the RTH, the retail, why it's pulled back quite sharply, but it's still way up near the all-time highs in a high-level consolidation. So those are the things that I want to talk about. What's working, what's not working, what really deserves a timeout, where is it best to utilize your money. And for instance, we've been long the Dow over the last this past week, waiting for leg D. We got leg D. We got stopped out yesterday. Nice profit for a very short-term move to the upside. And we are starting now just to nibble to the short side, just small position, still mostly got longs, and under the radar longs, I think, at this particular stage. That's really what I want to be looking at. Every day you'll get my opening call, you'll get my, let me just get there, look, this is my overview, this is what I talk about. I show exactly what's happening. If the at 11:10 today, I say, if the S&P is -6 or more, what you're going to expect. If the Dow is -30s or more, these are the things to look for intraday. I talk about the volatility index. Look at this. The VIX index goes to 11.50 yesterday after being at $8.84. That should have been a move of 300 points, at least to the downside. That's showing that they're still buying. But the buying doesn't mean to say that we need to scream to new highs. It could be very selective buying. I talk about my Chapman Wave Chin gauge, which has been working quite nicely, except for 2 days ago where the Dow did not go minus. The S&P did, but the Dow didn't. Was that yesterday? Whatever it is, and day before, I think. And this is the bar chart of the Dow, and this is just one of the many charts I give every day. I talk about the Dow, I show the Dow made its leg D, Chapman Wave 5 on the upside. Haven't got a confirmation yet of a peak. We'll see if it happens today. What are the implications, etc. 120-minute chart. It's just really a very comprehensive look. And then, of course, I have my Traders Corner right here. This is what we do. There are 20 to 22 bullet points every day. So this is going to be very important. Why? Because look at this. You've got Ferrari race. This is one of my benchmarks for the socioeconomic, political, not political in a different sense. This is a geographically political thing. Making a leg C to the upside. Ferrari. Race is the symbol. Up $1.82. Look at that. It screams from 84 to 105.86 in just 2-3 weeks. What does that mean? What are the implications? It's only in leg B in the mega bull market in the monthly chart. What does it mean for the year? So these are all things that I want to be talking about. So it's really going to be comprehensive. I'm really looking forward to it because it's a challenge for me in terms of the timing. Fortunately, we closed the month out the day before of July. We start Monday. Yeah, Monday. So Tuesday, we have Tuesday and Wednesday of August. It's going to be really important how we start off. Do we start it with some new highs? The implication then is the monthly charts have extended. It'll be 2 months before you can confirm a peak. A whole bunch of implications. So go to the front page of TFNN, check it out. You'll see it there, the opening call, and what you can do to sign up. Looking forward to it. Have a wonderful weekend. Stay tuned for some great shows coming up today, and I'll be back on Monday. And
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,